Hi, my name is Alejandro Gomez. I will be explaining the economical impact of Brexit in the UK and the EU. First, here's a little bit of background. What is Brexit? Why is Britain leaving the European Union? A referendum, a vote in which everyone or nearly everyone of voting age can take part, was held on Thursday, 23 June, to decide whether the UK should leave or remain in the European Union. Leave won by 52% to 48%. The referendum turnout was 71.8%, with more than 30 million people voting. It's very important to note that the Brexit referendum was set to have zero legal power, something all the parties agreed beforehand. But it wasn't marketed at all to the public in such a way. Still, the ignorance of such referendum will mean an insult to the very concept of democracy. What was the breakdown across the UK? Britain has got a new Prime Minister, Theresa May. The former Home Secretary took over from David Cameron, who resigned on the day after losing the referendum. Like Cameron, May was against Britain leaving the EU, but she says she will respect the will of the people. She has said Brexit means Brexit, but there's still a lot of debate about what that will mean in practice, especially on the two key issues of how British firms do business in the European Union and what curbs are brought in on the rights of European Union nationals to live and work in the UK. England voted strongly for Brexit by 53.4% to 46.6%, as did Wales, with Leave getting 52.5% of the vote and Stay 47.5%. Scotland and Northern Ireland both backed staying in the EU. So when will Britain actually leave it? For the UK to leave the EU, it has to involve an agreement called Article 50 of the Lisbon Treaty, which gives the two sides 2 years to agree on the terms of the split. Theresa May has said she intends to trigger this process by the end of March 2017, meaning the UK will be expected to have left by the summer of 2019, depending on the precise timetable agreed during the negotiations. Once negotiations officially begin, we will start to get a clear idea of what kind of deal the UK will seek from the EU on trade and immigration. The government will also enact a Great Repeal Bill which will end the primacy of EU law in the UK. It will incorporate EU legislation into UK law, after which the government will decide which parts to keep, change, or retain. The government lost a court case recently. A court challenge to Theresa May's right to trigger the Article 50 process without getting the backing from Parliament has been successful in the High Court. This means that there could be delays to starting the Article 50 process, but Downing Street is appealing to the Supreme Court with a hearing due in December. Well, but what has actually happened in the British economy so far? Many economists prior to a referendum have been predicting an immediate and significant impact on the UK economy and consumer confidence should the country vote to leave the EU. But so far, these predictions have not come to pass. Latest figures show the economy grew by 0.5% in the 3 months after Brexit vote, powered by the UK's service sector. This was lower than 0.7% rate in the previous quarter, but stronger than analysts' estimate of about 0.3%. In the currency, the pound has fallen dramatically since the Brexit vote at the end of June. It declined to a 3-year low against the euro following Theresa May's announcement that the UK will begin formal Brexit negotiations by the end of March. Since the referendum, it has fallen about 18% against the dollar, to levels not seen since 1985. In interest rates, since the vote, the Bank of England has taken a number of steps to boost the UK economy. It cut interest rates from 0.5 to 0.25% in August, the first reduction in the cost of borrowing since 2009, and taking UK rates to a new record low. Consumer confidence has also been an issue. the UK has now the biggest fall on consumer confidence since 26 years ago. Many people are buying home appliances, furniture, and other big purchases. Since people are predicting a rise in prices, they rather spend quickly now, but lower, than later and higher. Although many people argue that only when the trading issue and decline is resolved, there will still be an uncertainty among the population. Now let's hear what Victoria Craig, a FoxBusiness.com member, said when she traveled for the last update on the business and economy environment 2 months after the Brexit vote.
While some economists are warning that trouble is still ahead, it's business as usual in the UK. FoxBusiness.com reporter Victoria Craig is here with the details. You were there 8 weeks after they made the vote. Yep. And you write this, I love this line, you say the only certainty is uncertainty.
Yes.
What do you mean by that?
You know, I think it's so interesting because everybody had this apocalyptic scenario. All the economists said the world's basically going to end. And you go over there 8 weeks later and it's like nothing ever happened. I mean, the pubs are packed, restaurants are busy, people are on the streets. So I sat down with economists and trade experts, and there's a couple of points here. You know, the process to actually exit the EU is going to take a while. That's a 2-year process just to figure out the mechanics.
Right.
After that, it's figuring out what the trade deals are. And there are several different possibilities for how different trade deals could be worked out between the UK and the EU, and then the UK and all these other nations around the world. So businesses have basically said, you know what, until we have clarity, we're just going to keep going.
Well, but do you think that this is
Now there are two sides of the issue, the pro-Brexit and the ones that are against it. And most of them have discrepancies in manners like, for example, trade. The EU is a single market in which no tariffs are imposed on imports and exports between member states. Britain also benefits from these trade deals between the EU and other world powers. The EU is currently negotiating with the US to create the world's biggest free trade area, says the BBC, something that will highly be beneficial to the British businesses. Britain may lose some of that negotiation power by leaving the EU, but it will be free to establish its own trade agreements. Leading Brexit campaigner Boris Johnson, meanwhile, has proposed adopting a Canada-style trade agreement. The idea was quickly diminished by Cameron at the time, who said it would mean years of painful negotiations and a worse deal than we have today. Whether other EU countries will offer such generous terms is one of the big unknowns of the debate. Pro-exit campaigners argued that it would be in the interest of other European countries to establish a free trade, but their opponents suggested that EU would want to make life hard for Britain in order to discourage further breakaways. France also warned recently that there would be consequences for Britain if it left the EU. In the investments, in the long term, there are diverging views. Pro-Europeans think the UK's status as one of the world's biggest financial centers would be diminished if it is no longer seen as a gateway for the EU for the likes of US banks. While Brexit campaigners suggest that, free from the EU rules and regulations, Britain could reinvent itself as a Singapore-style supercharged economy. Fears that car makers could scale back or even end production in the UK if vehicles could no longer be exported tax-free to Europe were underlined by BMW's decision to remind its UK employees at Rolls-Royce and Mini of the significant benefit EU membership confers. Barclays, however, says that the UK would then be seen as a safe haven from most of the risks that the EU imposes, attracting investors, boosting the economy and the pound. Lastly, the issue is likely to hinge crucially on the terms that the United Kingdom can negotiate in the event that it does decide to leave. Thus, predicting the future for the British economy is still a foggy task.